I think actually the 50 basis point rate cut last week from the Fed is a great use case or case study to explain the difference between short rates and long rates, or basically Fed funds, SOFR, and Treasuries. So, although the Fed is made out to be this all knowing, all powerful entity, the Fed only controls the Fed funds rate, which is an overnight rate that banks can borrow from each other. And the Fed funds rate basically directly impacts SOFR. So if you're a floating rate borrower, if you have a mortgage that's the index rate is SOFR, then your mortgage is floating, which resets every month, and the Fed has a direct impact to what your mortgage rate is. Now, I would say most people, maybe not all the time, but a lot of real estate is financed with fixed rate debt of different maturities. Could be 5-year debt, 7-year debt, 10-year debt, and those loans have an index rate based on the commensurate U.S. Treasury yield. So if you're borrowing a 5-year debt term on a fixed rate, your index is likely going to be the 5-year U.S. Treasury yield. And those rates are set by the market, right? Because those are bonds traded in the open market, and people are constantly buying and selling those bonds, which then sets the yield. So the Fed can raise rates, lower rates, whatever they want to do, but the market is the market, and the market's going to trade those 5, 7, and 10-year bonds, and that's what's going to be setting the price. So there's a big disconnect there that people usually don't understand and take for granted, because they think, oh, well, the Fed lowered rates. Well, that means, like you said, my mortgage is lower. Well, actually, the funny thing about what happened on Wednesday was rates actually went up a little bit. The 5-year, the 7-year, and the 10-year went up a little bit after the Fed lowered rates by 50 basis points. So, anyone who's kind of wondering how that works, well, there's your answer, right? The Fed controls the Fed funds rate, which then controls SOFR, but they most certainly do not control treasuries.